Hello everyone and welcome to Explain the Charts. Today is March 24th, 2026, and the market is currently navigating a sea of complex signals for Amazon. As we speak, Amazon is trading around $207.84, which is down about 1% on the day. This price action is unfolding against a backdrop of significant geopolitical and operational news. Reports have surfaced that drone activity in the Middle East has disrupted AWS data centers in Bahrain. While the market has shown some resilience to this, it adds a layer of risk to Amazon's global infrastructure. Furthermore, we are seeing intensified competition in the logistics space as FedEx and Walmart push harder into same-day delivery. On the bullish side, analysts from Barclays have recently reiterated a $300 price target for the stock. This optimism is driven by the acceleration of AWS and its multi-billion-dollar agreement with OpenAI. CEO Andy Jassy is doubling down on a massive $200 billion AI infrastructure investment. Wall Street is currently reassessing this bet, weighing the short-term capital expenditure against the long-term revenue potential. Investors are also watching the expansion of the Zoox robotaxi unit into major cities like San Francisco and Las Vegas. Despite these catalysts, the stock has been a frustrating laggard for many, down roughly 10% year-to-date. Let's jump into the chart data to see how these fundamentals are manifesting in the price action. We will start by looking at the daily chart to get a sense of the long-term trend. Looking at the daily chart, we can see a clear struggle for direction over the last several months. Back in November 2025, Amazon was testing highs in the $250 range. However, since February 2026, the stock has faced consistent selling pressure. We saw a major capitulation low on March 18, 2026, where the price touched $192.82. This level acted as a massive support zone, prompting a sharp reversal back toward $210. The current consolidation around $207 suggests the market is waiting for a clear catalyst to break the range. If we look at the volume during the March 21st rally, it was significantly higher than the previous days. This indicates that institutional buyers might be stepping in near the $190 to $200 level. However, the downward sloping trend from the January highs of $247 is still very much intact. Resistance is currently sitting at $215.20, which was the peak on March 17th. Until we see a daily close above that level, the long-term bearish momentum remains a concern. The market seems to be pricing in the high capex costs for AI infrastructure while ignoring the growth projections for now. This mismatch between analyst targets and actual price action is creating a dislocated opportunity, as some experts call it. Now, let's zoom in on the 1-hour chart to see the more recent intraday trends. On the 1-hour chart, specifically looking at the period between March 4th and March 12th, the volatility is palpable. We saw a significant gap up on March 4th as the price jumped from $208 to over $215 within hours. This rally was likely fueled by initial reports of AWS growth and AI integration success. However, notice how the price failed to maintain those gains, drifting lower over the subsequent days. By March 12th, we were back testing the $209 level, showing that the bulls couldn't hold the higher ground. This hourly timeframe highlights how the news of drone strikes in Bahrain on March 13th likely contributed to the slide toward the 190s. Technically, the $215 level has turned from a breakout point into a heavy overhead supply zone. Every time the stock attempts to reclaim 215, it is met with significant sell orders. We can also see a series of lower highs on this time frame, which is traditionally a bearish signal. To change this narrative, we need to see a breakout above $212 followed by a retest and hold of that level. The volume clusters near $210 suggest that a lot of trading activity is concentrated here. This makes 210 a psychological pivot point for short-term traders. If we hold 205, the hourly structure remains neutral to slightly bullish. If we lose 205, we are likely heading back to retest the March lows. Let's get even more granular and look at the 15-minute chart for today's action. Switching to the 15-minute chart, we can see the microtrends that developed throughout yesterday and today. Yesterday, March 23rd, saw a dramatic spike at 11:01 Universal Time Coordinated, where the price surged from $202 to $210 in minutes. This was a massive 4% move that likely caught many short sellers off guard. Since then, the stock has been grinding sideways in a tight range between $207 and $211. This consolidation is actually a positive sign after such a large move, as it allows the RSI to cool down. However, we are currently seeing some weakness as we test the lower end of this recent range. The support at $207 is critical for the rest of today's session. If the price breaks below 206.50, we might see a fast move down to fill the gap left from yesterday's opening. Notice the heavy volume on the red candles near the close of the March 23rd session. This suggests some profit-taking is occurring after the quick run-up. For a bullish continuation, we want to see the price clear the 211.50 level with high relative volume. The VWP for today is hovering right around our current price, meaning the market is in a state of equilibrium. Short-term traders should look for a break of 210.50 to the upside for a potential long entry. Conversely, a sustained move below 207 suggests the bulls are losing steam. We are also keeping an eye on external market factors like rising oil prices, which could impact consumer discretionary spending. To summarize our analysis for Amazon on this March 24, 2026, let's recap the key levels. Major support is found at $192 and the psychological $200 mark. Major resistance is sitting at $215, followed by the more significant $240 barrier. I would estimate a 60% likelihood that the stock continues to consolidate between 200 and 215 in the short term. A breakout above 215 is about a 25% probability, contingent on positive AWS revenue updates or a de-escalation in the Middle East. A breakdown below 200 has a 15% probability, likely only triggered by further infrastructure damage or worsening macro data. Long term, the bullish case is supported by a 92% analyst buy rating and the massive AI growth roadmap. Short term, the bearish case is driven by regulatory hurdles and high capital spending concerns. Look for a daily close above $215 to confirm a trend reversal and a move toward that $300 target. If we see the stock lose $200, it may be time to reassess the long-term thesis. Always watch for news regarding the Transformer smartphone project, as that could be a wild card for the stock. Thank you for watching this in-depth breakdown on Explain the Charts. Please remember that this is not financial advice. Trading stocks involves significant risk of loss. Always do your own research and consult with a professional advisor before making any investment decisions. We will see you in the next analysis.